Hello and welcome to HiWayFX market news for January 21st, 2016. The euro rises on Thursday due to a new round of risk aversion into the markets, with investors running to cover in search of low-yield safe currencies, thus bidding up the euro-US dollar pair. The key currency pair euro-US dollar trades near to the mark of 1.09 by adding 0.2%. The key driver for the pair today is the European Central Bank's decision regarding interest rates. Analysts expect that the ECB is widely seen keeping all interest rates. However, the central bank is also expected to highlight increasing growth and inflation risks, raising the prospect of further policy easing later this year. The resistance levels for euro are 1.0961 and 1.1020. The support levels for euro are the following: 1.834 and 1.0780. This morning we observed a high volatility with the US dollar-Canadian dollar pair. During the Asian trading session, the rate of US dollar-Canadian dollar pair fell below the level of 1.4450. Currently, the US dollar-Canadian dollar pair managed its losses and trades near the mark of 1.4450. The reason of the high volatility are the results of meeting of Central Bank of Canada. The Bank of Canada keeps its policy rate unchanged, conceding defeat on its power to help the economy. As a result, the Canadian dollar became stronger against the American dollar. Analysts at Nomura say that, against our expectations, the Bank of Canada left its policy rate up 0.50%. The Bank of Canada noted that the risks to the profile for inflation are roughly balanced, and that the bank's governing council judges that the current stance for monetary policy is appropriate, suggesting a neutral policy stance and that the BOC is not considering further easing. The resistance levels for US dollar-Canadian dollar are 1.4590 and 1.4628. The support levels for the Canadian dollar are 1.4450 and 1.4395. US crude oil is still under pressure. This morning, oil trades near the level of $28 per barrel by losing 1%. Yesterday, we observed a new round of sell-off in the oil market. As Reuters notes, US oil prices crashed to below $27 on Wednesday for the first time since 2003, caught in a broad slump across world financial markets, with traders also fearful that the crude supply glut could last longer. The slide of more than 25% in oil prices so far this year has piled more pain on oil drillers and producing nations alike, yet they continue to pump more oil into the oversupplied market. The resistance levels for oil are $28.50 and $29.20. The support levels for oil are $28 and $27.50. On Wednesday, the key American index S&P 500 dropped 1.2% to 1,859.33, closing at its lowest level since April 2014. However, during the day the index was losing more than 3%. The Standard & Poor's 500 index reached a 21-month low following a renewed sell-off across stocks worldwide as skepticism about the strength of the global economy intensified. As Bloomberg notes, the S&P 500's plunge triggered a technical signal that indicates it's oversold. The Gorgeous Relative Strength Index, which measures whether gains or losses have been too fast to sustain, dipped to a 30, a threshold that indicates a rebound may materialize. The RSI last fell below 30 on January 13th. The prior time it was that low was on August 25th, when the S&P 500 hit a bottom and rallied 6.5% over the next 3 days. The resistance levels for S&P 500 are 1850 and 1856. The support levels for the index are 1836 and 1810. Stay up to date with all the key financial news around the world by liking us on Facebook, following us on Twitter and Instagram, and subscribing to our YouTube channel. For more information, please visit our website www.hiwayfx.com. Thank you and have a good trading day.